Welcome back to the Robbins LLP podcast. Today we're discussing new allegations involving Wise Group PLC, ticker WSE. A securities class action has been filed on behalf of investors who purchased Wise securities between May 11th, 2026 and July 23rd, 2026. Wise is a global financial technology company offering international money transfer and cross-border payment services. On May 11th, the company transferred its primary listing from the London Stock Exchange to the NASDAQ Global Select Market.
According to the complaint, defendants sought to portray Wise as well-positioned for growth in the United States, while allegedly failing to disclose significant regulatory risks tied to anti-money laundering and counter-terrorist financing compliance. Plaintiff alleges that Wise materially understated these risks in its SEC filings and public statements at the time of its NASDAQ listing.
The complaint states that Wise allegedly faced substantial regulatory exposure due to materially deficient anti-money laundering controls and anti-terrorist financing procedures. Plaintiff further alleges that Wise Europe was under active investigation by Belgian authorities for potential money laundering offenses involving more than 500 million euros in suspicious transactions.
The lawsuit also contends that Wise faced a heightened risk that the Office of the Comptroller of the Currency would deny its application for a U.S. National Trust Bank charter due to long-standing compliance deficiencies. As a result, plaintiff argues that defendants' positive statements about Wise's business, regulatory compliance, and future prospects lacked a reasonable basis.
The market began to learn the truth on June 1, 2026, when Reuters reported that Belgian prosecutors were investigating Wise Europe in connection with alleged money laundering activity tied to fraud, corruption, and drug trafficking. Wise's U.S.-listed shares declined from $12.77 to $10.72 over 3 trading days.
Then, on July 24, 2026, reports disclosed that the OCC had denied Wise's application for a National Trust Bank license, citing significant supervisory and compliance concerns, including long-standing deficiencies in Wise US's anti-money laundering and counter-terrorist financing program. Wise's shares fell an additional 6.2%, closing at $11.33.
Robbins LLP is now investigating whether Wise misled investors about its regulatory compliance, anti-money laundering controls, and the risks associated with its U.S. expansion. If you purchased Wise shares during the class period, you may be eligible to participate in the lawsuit. Some investors may also choose to serve as lead plaintiff, the representative party who helps direct the litigation. Representation is on a contingency fee basis. Shareholders pay no fees or expenses. That's today's update. Thanks for joining us on the Robbins LLP podcast. Stay informed, and we'll see you next time.